U.S. corporations legally avoid hundreds of billions of dollars in taxes every year. As economic inequality grows, is it time to claw some of this money back? You're watching Inside Story Americas from Washington. Hello, I'm Shihab Rutansi. On Tuesday, business journalists focused on Apple's latest profit figures. What got less attention was the company's announcement that it was going to start borrowing money as a mechanism to avoid paying tax. Apple and many big corporations such as Google or General Electric avoid paying billions in tax, largely by channeling income offshore to countries like Bermuda. It's estimated that offshore tax avoidance costs the U.S. government $150 billion annually. Billions more are saved through a variety of tax breaks and loopholes that the corporations argue ensure they can stay profitable and keep the economy moving. But at a time when the poorest in society are being asked to sacrifice their medical care and pensions to help bring down the national debt, and the latest indicators show that it's only the wealthiest 7% of the country who are seeing any financial benefit from what's called the U.S. economic recovery, is it time to look again at the tax burden of hugely profitable corporations? To discuss this further, I'm joined from New York by Daniel Shaviro. He's professor of taxation at New York University Law School and has worked on tax policy in Washington, helping to draft the 1986 tax reform law. Also in New York, Jeffrey Robinson, an author and financial journalist. He wrote the book, The Swiss Wash Whiter. Here in the studio, Steve Ellis is Vice President of Taxpayers for Common Sense. Steve, actually, let's first look at what Apple announced yesterday and how they, in fact, move their money around. Their announcement said that they earned $9.5 billion in profits for the first quarter of 2013. And according to corporate filings, Apple allocates more than 70% of its profits overseas to countries with lower tax rates. These profits are held in subsidiaries in countries like the Netherlands and Ireland before being moved again to offshore tax havens in the Caribbean, in a move Apple is said to have pioneered, known as the double Irish with a Dutch sandwich, according to an investigation by the New York Times last year. The company thus avoids a standard U.S. tax rate of 35%. Apple's not only moving money overseas, though. The California-based company also moves profits across the state line to Nevada, which has no corporate tax. And on Tuesday, despite the huge profit numbers and its vast cash reserves of $145 billion, of which some $102 billion are stashed overseas, the company announced it would actually be borrowing money in the U.S. for a stock buyback and dividend payments to reward rest of shareholders. If the company was to repatriate cash from its reserves overseas, Apple would be liable to a large U.S. corporate tax bill. Steve Ellis, I mean, that's just their legal responsibility to shareholders. I'm sure they'll argue. This is just good business. It's all above board, after all, as well.
Well, it all technically meets the letter of the law. And so, I mean, essentially, they're not the only one. There's lots of companies. I mean, the Wall Street Journal reported last month that the top 60 corporations had more than $130 billion just last year parked overseas. And so the key thing is that until they repatriate that money, which they would be required to do to basically pay their shareholders, do a stock buyback or anything like that, until they repatriate it, they don't have to pay U.S. taxes. It's deferred because as a country, we have worldwide taxation. So we tax U.S. companies wherever their profits may be earned, whereas other countries do territorial as a system. And so these companies are hoping that at some point there'll be a tax holiday like we had in 2004.
And they're lobbying hard for it.
Absolutely, absolutely, where they'll be charged a low rate, maybe 5%. And just hopefully, for the federal government, they're saying, well, at least we'll get something, and they'll bring the cash back. And there's been a lot more money parked overseas than where it was even at 2004 because it seems like a good idea for these companies.
But Professor Shaviro, I mean, it's not that Apple isn't paying any tax, and in fact, they claim to have paid $6 billion in taxes in 2012, although there's some confusion about that figure. It's not clear if actually they're including all the taxes paid by their employees in that number. But I mean, but still, that's a substantial amount of money. I mean, they are doing their bit, aren't they?
Well, I haven't seen Apple's latest return yet, but the thing is, one thing there's some financial accounting is very strange. And many companies play games with their financial accounting so that they can tell the shareholders they're never going to have to pay taxes that they actually are probably going to have to pay someday. Apple, strangely enough, does it the other way around. They are so confident, or they have been so confident of their stature as a company, that they kind of say that they're going to pay taxes that they probably never will pay. So they're willing to look worse in the eyes of the financial, in the eyes of investors, at least investors who aren't reading the footnotes carefully, in order to kind of look better, I think, in Washington. So they have, there's some strange accounting rules so that if a company stashes its money in Bermuda and it's not going to bring it home for 10 years or 20 years or ever, they very often have to, unless they can claim they'll never pay the tax and tell their accountants that, they have to, they take full credit. They list it on their statement as if they were actually going to pay it, which may not even be true, and even if they do it, it'll be a long time in the future. So Apple actually doesn't play that accounting trick. So they claim they are going to pay taxes. So if anything, they're understating their income to investors, but they're actually overstating what they are going to pay to the U.S. government, in anyone's opinion, in most people's opinion.
Right, but they're still
and
also
again,
moving.
I haven't seen their most recent statement, but I know that's what they've done in the past.
But they're certain. I mean, I guess we have a lot of focus on Apple often partly because Apple presents itself as one of us in some ways. I guess it's always interesting to look at.
Well, it's a great company.
Yeah.
I have an Apple. If I have an Apple iPhone in my pocket right now, it's buzzing at me.
But I mean, I think the question is, Jeffrey Robinson. I mean, you do most of your work on corporate crime and money laundering. Of course, this isn't that. This is tax avoidance, not tax evasion. But where does that demarcation actually occur? Where should it occur, perhaps, though, do you think?
Well, I mean, Congress sets down the law that says this is tax avoidance, this is tax evasion. And there's a very straight line in the sand between the two. I mean, it's one or the other, and it's very easily defined. It gets murky when you get into the industry that has been built up around the world, basically the offshore industry, to accommodate tax avoidance when they get into tax evasion. You mentioned the Swiss Wash Whiter, which is a little ebook. It's just published today that I've done about the Swiss financial industry, which is a $2.1 trillion business. And it has been set up originally, of course, for people to accumulate wealth legally. They go over the line, and they have been cheating in enormous ways. The bank UBS just got caught, along with a bank called Wegland, which is now out of business, because they were soliciting Americans to evade taxes. And that's where it gets very murky as to how this industry offshore goes across the line and starts helping people cheat.
Well, we'll develop some of those thoughts in a moment, but as I think most of you have said, actually, that it's not just clearly Apple that's stashing cash overseas and using loopholes that do end up costing taxpayers billions of dollars per year. For example, in 2010, General Electric raked in $4.2 billion in profits and paid no taxes. In fact, they received a $3 billion refund. Investment bank Goldman Sachs made $4.9 billion in 2008. Not only did they not pay any taxes, they received a $785 million refund. Google made $12.3 billion in 2011. They did pay $2.6 billion in taxes, though moved $8.5 billion in profits overseas. Overall, major corporations stashed an estimated $150 billion into offshore accounts last year, costing the average taxpayer an estimated $434 more to cover the companies who aren't paying their share. As we look at that, and again, all this is above board, Steve, are there reasons why they have all these loopholes and all these different tactics available to them? Was this intentional to promote economic and corporate growth, or is it just a matter of the piecemeal nature of the tax code having developed over the last few decades?
Well, it is definitely part of the piecemeal nature of the tax code, and some of it is just about this idea of that we have worldwide taxation, but you don't actually have to pay. You can defer that taxes until you repatriate it back to the United States. So we're counting your profits that you're making overseas, but we're going to we'll wait on taxing them until they actually come back. So it's created this incentive to park that cash overseas. But then separately, I mean, there's a litany of tax expenditures, these various tax breaks that are written into the code that are, Section 199 manufacturing tax credit that oil and gas companies and other companies domestically use. And there's all sorts of provisions in here. These are subsidies that are, a subsidy is should be a value neutral term, but it basically is, it's an enticement to do something that wouldn't otherwise occur. And so when you look at the total value of tax expenditures, so I'm not even talking about the deferral of worldwide taxation, each year we're talking about, and this is both personal and corporate tax rates, more than $1 trillion, $1.1 trillion in foregone revenue every single year that is through the various different tax expenditures that are made available that have been in place, some of them for a century.
And
in terms of the,
go ahead, Professor, yeah.
So in terms of the piecemeal nature of the tax code, I think that's a very large part of the problem with the big U.S. and other multinationals. The tax system has some myth that, like, Apple U.S. is one company and that its wholly owned subsidiary in the Cayman Islands and in Bermuda and Ireland, these are totally separate companies. So all these Apple companies have dealings with each other, and if you didn't know what was going on, you'd think, my God, those guys in Apple Bermuda are really fleecing the poor Apple U.S. Folks. They're like getting all the people in the U.S. do all the work, and all the profits show up in Bermuda. But of course, it's because Apple doesn't care which one of them, except for tax, which one of them has the profits, because they're all commonly owned. So they play games, firms that the U.S. tax law thinks are separate, but they're really the same company.
Right,
They
and then
play games with those companies to put all the profits in the havens.
But that seems to be sort of a tactic that's praised as financial engineering. I see the term often, you know, but does basically seem to be quite often misrepresenting the profitability of operations, say, in the U.S. and suggesting that they're far more profitable than somehow in Bermuda.
Well, it's certainly it's definitely economically misrepresenting it. Why is Apple so profitable? The core reason is they have some very talented people who live in the U.S. mostly who are doing some things that the company's rewarded for. But unfortunately, under the tax law, they may be right that they're able to, because of games and tricks they play that are perfectly legal, get to treat all the income as having arisen abroad. And that is mainly a problem with the rules. They're neither cheating under the rules nor hiding it from the IRS, which pretty much knows what they're doing.
Right.
But the rules are so bad.
And I mean, it's not just Apple. I mean, actually, Paul Buchheit did some really interesting work. He actually went through a lot of the corporate tax filings at the Securities and Exchange Commission, which, again, I mean, it's all pretty opaque. You really have to work through the figures to really find out what's going on. Here are some of the details he found. That Citigroup, that had 42% of its 2011-2012 revenue in North America, almost all in the US, but declared a $5 billion US loss and a $28 billion foreign profit. Pfizer had 40% of its 2011-2012 revenues in the US, but declared almost $7 billion in US losses to go along with $31 billion in foreign profits. Bank of America, that's 82% of its 2011 to 2012 revenue accrued in the US, but declared $7 billion in US losses and $10 billion in foreign profits. Professor, sorry, you wanted to say?
Yeah, they put all the borrowing, they play games with where they borrow money and where they put it, who they claim owns the intellectual property. Like poor Apple US ends up not owning the intellectual property, which instead is owned by Apple subsidiaries abroad, which supposedly financed it with money Apple US just gave it, and supposedly bore the risks, which are really company-wide risks. So this is just sort of silly tax planning. But again, I mean, if I were an Apple shareholder, I guess I'd say, well, from that standpoint, I might be glad they're doing it because they're allowed to. But it is crazy to have rules like that.
Actually, I mean, on that issue of intellectual property and digital downloads and these sorts of licensing agreements that a lot of these technology companies rely on, I mean, is this why the technology companies seem to be doing particularly well out of these sorts of loopholes then?
Oh, technology is great for doing this stuff. I mean, if you had actually, I think even so-called bricks and mortar businesses can do it to a degree if they're global because they have valuable intellectual property. But yeah, what makes Apple such a profitable company? It's not that they have some factory that's really well designed somewhere that's turning out iPhones no one else could make if they had the prototype. It's because of designing ideas and implementing them, and then claiming that companies that aren't U.S. members of the group are the ones that did it.
All right, so Jeffrey Robinson, again, as someone who's an expert on crime, and again, you've dug deep into Swiss bank accounts and things which are clearly tax evasion. But I mean, when you look at all of these sorts of shenanigans there, I mean, shouldn't we be thinking about crime as well? I mean, even though technically it's not.
Well, yes. As a matter of fact, I've just come back from a speaking tour in the Caribbean, telling prime ministers and ministers of various countries, you've got to stop fooling around where drug trafficking is concerned, where political and corporate corruption is concerned, and stop creating the vehicles to hide this money. But when you're talking about things, as the professor and Steve were talking about, transfer pricing, the idea of being able to move profits from jurisdiction to jurisdiction so they're not taxed in a high tax area like the United States, that's not the problem of the offshore world. The offshore world is merely accommodating the legal loopholes that are created by Congress. I mean, my beef with the offshore world, and I'll leave Switzerland out of that for a moment, and maybe the Caymans and the Bahamas as well, but the rest of the offshore world, poor Antigua, is simply creating vehicles that people can use legally. And their excuse is, look, if you don't pay your tax in America, that shouldn't be our problem. Right. If you want to buy a shell company in St. Lucia and move your intellectual property through it, well, that's how we earn our living. Complain to Washington. Switzerland is different because the Swiss have actively lied, cheated, and steal to try and create a tax evasion business. I mean, just look at the two big Swiss banks that have recently been caught, Credit Suisse and UBS, both of whom are members of something called the Wolfsburg Group. And Wolfsburg was a group of 11 banks who got together to say, we're going to draw up a set of rules to stop cheating and lying and stealing and creating all of these funny companies and ways of hiding money. And the two Swiss banks, the only two Swiss banks in the group, have recently been fined big money for doing just that. Well, when you create a situation that will allow cheating and stealing, people will cheat and steal.
And it's a fair point then. So Jeffrey, then Steve Ellis rather, this is not then Apple and other companies being socially negligent. This is a government problem, and they're just doing what they would do. So again, we do hear lots of talk about tax code reform. Is that ever really likely, though, given that there are many meetings similar to the meetings that Jeffrey is describing there here in Washington, though, saying that we don't really want the tax code to be reformed, and there is that revolving door. Which has just been brought out this week once again, actually, in various articles, between the Senate Finance Committee and corporate lobbyists who have no intention, really, of closing these loopholes because, frankly, the profitability is everything.
Well, I mean, there's been a lot of talk about tax reform. I mean, more in the last year or two than we'd seen for a while. And so you have the president in his budget said that he was for basically revenue-neutral corporate tax reform, such as was done in 1986 in the Tax Reform Act. You have Chairman Camp, who's the chairman of the House Ways and Means Committee, the Tax Writing Committee in the House, has formed a bunch of working groups to talk about this, is committed that he wants to do it. Senator Baucus, the chairman of the Finance Committee in the Senate, has just announced that he's retiring yesterday, and that he is pushing for these last 2 years that he's got the job for tax reform, which this one hand you can look at it unshackles him from some of those issues and worrying about raising money and offending people, but it also means that he doesn't have as much to hand out and power.
He's the one who most of his staffers are now lobbying on K Street for the companies to
right, but you would say that he doesn't need their cash anymore, as far as making contribution. So, I mean,
but he has only one vote, of course, on the committee.
No, this is true. But, and so I think that and, I've been at Taxpayers for Common Sense for 13 years. I got to be an optimist to do my job. And so, I mean, I think that there are some figures coming together on this, and it remains to be seen. But when you look at the history of 86, you know that it was a needle that was threaded. I mean, it was a difficult thing.
Before we
may I just say one thing, that it's not governmental as much as it is political.
Right.
Because there are certain mechanisms that have been created by politicians to help certain people, largely their backers, operate like corporations. You and I have to pay our taxes, but there are some people who can create a corporation out of thin air and divert their money offshore. We had a presidential candidate who had a secret Swiss bank account. And I can tell you, having looked at all of this and having looked at his tax affairs, there is no excuse whatsoever for an American who must declare his worldwide income to use the secrecy afforded by Switzerland to have a secret Swiss bank account if tax avoidance or tax evasion is not part of the equation. Otherwise, you're paying for nothing. It doesn't make sense.
All right, well, as we look towards solutions, though, Professor Shavira, two things actually. First of all, on the question of offshore money that's stashed away, how would you go about finding all those trillions, even if there was the political will?
Well, okay, as I think the other two gentlemen have been saying, individual and corporate is very different because corporations can play a lot of games about corporate structure and which companies and so forth.
So if you were looking to close down the
the
corporate overseas
I
yeah.
It's harder to legally avoid paying any tax. Legally cheat is an oxymoron.
But I mean, to avoid some of this sort of misrepresentation using offshore subsidiaries and so forth, I mean, how would you go about doing that then, Professor?
You really have to change the rules. It's very difficult politically. I think essentially the starting point, there are two different things. One is if you're deciding how to tax Apple or GE or anyone else, you don't care about the formal legal lines between GE US and GE Caymans and GE Bermuda. You look at the entire worldwide group and you pretend that these fake artificial legal lines between one entity and another that all Cohen didn't exist. You then have the worldwide income of the group. Then you have to decide two things. How do you want to define the amount of it that's U.S. source? And if they have like smart, talented people working in the U.S. producing most of the income, you know it should mostly end up there. We could have a long discussion. I don't think the viewers would find that interesting about how to do that.
But that's
and then the second thing is
useful.
how much to tax the foreign source.
But Steve Ellis, I mean, you're you know, the front line of trying to push through reform. I mean, all we ever hear, though, is lower tax rates and then eliminating loopholes. Seems to be the kind of catch-all term. Is that, but not this sort of thing, though, really, is it?
No, but I mean, this is part of, if you look at Chairman Camp's, the Ways and Means Chairman, his proposal, he was trying to go towards a territorial system that made it a lot more difficult to park money overseas to try to ignore these subsidiaries. And so there's different ways to skin the cat. It was mentioned, you mentioned earlier about how Apple was even moving money out of California and into Nevada. Some of that is California has a unitary tax code, which is just basically looks at your overall earnings, how much of your company is located there, and taxes you according to that. So there's different ways to try to go at this.
There's another interesting point, I suppose. I mean, you wonder whether there is a change in thinking, perhaps, underway. I mean, we're getting various people, even the head of PIMCO, the largest bond fund, speaking out against austerity. And you wonder whether, does that mean then that they accept that you need more spending to get growth going, and that, of course, then means more tax revenue. I mean, do you feel any philosophical change happening, Professor? And of course, not also, the main ideological plank of austerity appears to have been destroyed the other week. I mean, do you think maybe people begin to wonder about all this there? Here?
Yeah, well, I think austerity has been. We've learned something that we've only known for 80 years, which is that austerity doesn't work in the face of a Great Depression or recession-style demand collapse. So we learned that. We already knew that, but apparently we had to learn it again. I don't know how tightly it ties up with this. I guess
because you've got to get the money from somewhere. If you're going to spend your way out of
the long term. See, there's a short-term problem that I think we really need to spend more. There's a long-term problem that we have to get our house in order. So having credible grounds for believing there will be revenue long-term, I think, is very helpful. Even if you're spending the money today and you're not collecting the taxes yet, if you've created a credible set of rules where you will collect the taxes, that's very helpful. In fact, indispensable.
And is there any sense, I mean, for these technological companies, for example, though, I mean, Steve, I mean, aren't they being rather short-sighted, letting the social infrastructure crumble, by not giving any, not paying their fair share of taxes?
Well, I mean, they have to be confident that
it's a globalized world anyway.
I think that there's probably some short-sightedness of being a good corporate citizen, but there's also the fact is, do they have any confidence that that money is actually going to go to that?
Right.
Just more revenue, how's it going to actually be spent? I mean, more than half of the discretionary budget goes to the Pentagon, for instance. So, right. I mean, they have to make some of these decisions as far as
they're conscientious objectors, are they? Okay. But I mean, the
reason we have taxes is because everyone won't voluntarily out of their own pocket say, sure, I'll chip in my share. That's just not human nature.
Right. But I mean, when we look at the latest Pew study then, suggesting that this recovery is incredibly uneven, I mean, it's not a recovery at all for, 93% of the population of the US. I mean, how closely connected do you think this issue of taxes are, Professor?
Well, it's really, I think, just connected in the sense that if we're going to spend money to get ourselves out of the horrendous employment hole we're in, we have to know that it's long-term fiscally reasonable. And to make the long-term picture work, it is useful to pick up things like this, which are quite significant, of course, as you were saying in the earlier numbers you attached to it.
And I
don't think anyone believes you could actually get $150 billion a year out of it.
Very quickly,
there is real money there.
First Steve and then Jeffrey, very quickly.
Sure, what I was just going to say is that as opposed to closing loopholes in the United States, that's actually going to be taking money out of the economy to the government. This is money that's profits that are just parked overseas that are doing no good, so to speak. And so being able to bring that back actually is almost like found cash.
Jeffrey Robinson, 20 seconds strictly.
Let me just suggest as a third category between avoidance and evasion. there is abuse of avoidance. And when you've got people disguising themselves as corporations to create deferred income in the offshore world, I think that's abuse of avoidance, and that should be stopped.
Jeffrey Robinson, thank you very much. Steve Ellis, thank you. Professor Daniel Shaviro, thank you as well. And that's all from the team in Washington, D.C. for now. Don't forget to follow us on Twitter and Facebook, where you can find more information about the program. And we want to hear from you. Share your ideas with us on Twitter. Our handle is AJ Inside Story AM.